Hello, everyone. Welcome to the market opening bell for Friday, April 25th. U.S. Treasury Secretary Bessent stated that Washington has not yet negotiated with Beijing on tariff issues, and President Trump has not unilaterally proposed reducing tariffs on China. The Hang Seng Index opened 42 points lower on Thursday, with losses widening to a low of 21,712, down 360 points at one point and closed down 162 points or 0.7% at 21,909. The H-share index fell 59 points or 0.7% to 8,056, while the Hang Seng Tech Index dropped 73 points or 1.5% to 4,975. Total market turnover was 204.7 billion Hong Kong dollars. Southbound funds recorded a net inflow of 3.387 billion Hong Kong dollars compared to a net outflow of 18.1 billion Hong Kong dollars the previous day. Technical analysis, the Hang Seng Index briefly reclaimed 22,000 but fell back, hitting a low of 21,712 yesterday, partially filling Wednesday's upward gap, a 270-point gap between 21,593 and 21,863, which is healthier for the market. The 9-day RSI remains above the 50 midpoint, and as long as it holds above 21,600, the index could retest 22,000 and aim for 22,300 after short-term consolidation. Mainland Chinese markets show divergence. The Shanghai Composite Index peaked at 3,313 and closed at 3,297, up 1 point. The Shenzhen Component Index hit 9,969 but closed at 9,878, down 57 points or 0.6%. Combined turnover in Shanghai and Shenzhen was 1.109 trillion yuan, down 120.7 billion yuan from the previous day. The RMB central parity rate ended 2 days of decline, set at 7.2098 per US dollar, up 18 pips. Spot RMB both onshore and offshore broke the 7.3 level early and fluctuated around 7.29. In Hong Kong, market attention focused on competition in mainland China's food delivery sector. Meituan and JD fell 5.2% and 6.2% respectively. JD announced that just 1 week after surpassing 5 million daily orders on April 15, its food delivery service reached over 10 million daily orders by April 22nd, covering 166 cities. JD's food delivery service launched on March 1st, hit 1 million daily orders by March 24th. Intensifying competition in the sector may leave no winners, with Meituan and JD likely offering aggressive merchant subsidies, potentially hurting profitability. Since China reported a first quarter profit of about 200 million US dollars under US GAAP, down 32%, with revenue falling 5% to 1.7 billion US dollars. Adjusted property EBITDA dropped 12% to 530 million US dollars. Its parent company plans to continue its share buyback program, aiming to increase its stake in Sands China to 74.9%. Macau's first quarter gross gaming revenue was 57.657 billion petas, up 0.4% quarter-on-quarter and 0.6% year-on-year, with average monthly revenue of 19.22 billion petas, below the Macau government's forecast of 20 billion petas. The Macau SAR government predicts 2025 gaming revenue of 240 billion petas, a 5.8% increase from 2024's 226.8 billion petas. Various investment banks forecast 2025 gaming revenue between 230.8 billion and 244 billion petas, with growth rates of 1.8% to 7.6%. In Q1, Macau had 30 casinos, unchanged quarterly and annually, with 6,000 gaming tables and 12,000 slot machines, also unchanged. The mass market contributed nearly 75% of total revenue, showing stability, while the VIP segment accounted for 25.1%, down significantly from 49% in Q1 2019, indicating a slow VIP market recovery. US President Trump again called for Federal Reserve rate cuts on Thursday. Fed Governor Waller said he would support rate cuts if tariffs lead to job losses. Cleveland Fed President Hammock noted that officials could act as early as June if clear economic trends emerge. The comments boosted expectations for a June rate cut, lifting US stocks. The Dow Jones Industrial Average rose 486 points, or 1.2% to 40,093, closing about 40,000 for the first time since April 15. The S&P 500 gained 108 points or 2.03% to 5,484, and the Nasdaq climbed 457 points or 2.7% to 17,166, marking its third consecutive day of gains. The Golden Dragon China Index rose 47 points or 0.7% to 6,981. Large cap tech stocks led gains, with semiconductors performing strongly. Micron Technology and Broadcom rose over 6%. Intel and AMD gained over 4% and Nvidia advanced over 3%. TSMC unveiled its 1.4 nanometer A14 process at a US Tech Forum, slated for mass production in 2028, with Apple expected to use it in the iPhone 19. TSMC's ADR rose over 4%. IBM reported strong Q1 earnings after Wednesday's close, but maintained its full-year guidance, as weakness in its consulting unit may reflect reduced demand for digital transformation. Its stock fell over 6%. Alphabet and Intel were set to report earnings after Thursday's close. On economic data, U.S. durable goods orders for March surged 9.2% to 300, marking three consecutive months of growth and far exceeding the market's 2% expectation, driven by a pre-tariff order spike. U.S. initial jobless claims for the third week of April rose by 6,000 to 222,000, meeting expectations and remaining near a two-month low. The Chicago Fed's National Activity Index fell to minus 0.03 in March from 0.24 in February, indicating below average growth. Our stock pick today is ImmuneOnco Biopharmaceuticals, stock code 1541. ImmuneOnco Biopharmaceuticals is a research-driven biotechnology company focused on developing innovative tumor immunotherapy. It's one of the few global biotech companies capable of systematically leveraging both innate and adaptive immune systems, adhering to its drug-by-design philosophy and utilizing its proprietary R&D platform. The group has built a robust pipeline comprising over 10 innovative drug candidates and 11 ongoing clinical programs. For the year ended December 31st, 2024, the group recorded revenue of 74.1 million yuan, a remarkable 191-fold increase from 2023. Revenue was derived from licensing fees, collaborative development income, sales of cell lines and other products, and testing services. On August 1st, 2024, ImmuneOnco entered into a licensing and collaboration agreement with Axion Bio Inc., a wholly owned subsidiary of Instill Bio Inc. Under the agreement, ImmuneOnco granted Axion Bio exclusive rights to research, develop, and commercialize IMM-2510 and IMM-27M outside Greater China. IMM-2510 is a bispecific molecule with a monoclonal antibody receptor recombinant protein structure designed for solid tumor treatment. It activates T-cell tumor killing activity while inhibiting tumor angiogenesis and growth. IMM 27M is a genetically engineered molecule with enhanced ADCC activity, boosting T-cell immune responses against tumor antigens. ImmuneOnco has received an upfront payment and near-term payments totaling $15 million from Axion Bio, with potential additional near-term payments of up to $35 million and milestone payments of up to $2.1 billion, including up to $270 million for long-term development and regulatory milestones, and up to $1.8 billion for commercial milestones. Additionally, the group will receive royalties ranging from single-digit to low double-digit percentages on global net sales outside Greater China. Assuming necessary regulatory approvals, InstillBio plans to initiate a U.S. clinical trial for AXN2510, IMM2510, in combination with chemotherapy for first-line NSCLC patients by the end of 2025. As a result, ImmuneOnco may receive further near-term payments based on progress under the agreement. Recommendation: buy at 6.8 Hong Kong dollars with an initial target of $7.5, followed by $8.2 and a stop loss at $6.4. I do not hold the above stock.